Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 18th, 2025, and we're diving into Darden Restaurants' fiscal 2026 first quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Darden Restaurants, known for its popular brands like Olive Garden and Longhorn Steakhouse, has just released its Q1 2026 earnings. Let's break down the numbers and see how they performed.
Revenue and profitability overview. Let's start with the top line. Darden Restaurants reported total sales of $3.0 billion for the first quarter, marking a 10.4% increase compared to the same quarter last year. John, what drove this impressive growth?
The growth was primarily driven by a 4.7% increase in same-restaurant sales and the acquisition of 103 Chuy's Tex-Mex restaurants. Additionally, the adjusted earnings per share came in at $1.97, which is a 12.6% increase from last year, although slightly below the forecasted $1.99.
That's interesting. Despite missing the EPS forecast, the sales growth is quite robust. How did the different segments perform?
Olive Garden and Longhorn Steakhouse both saw strong same-restaurant sales growth of 5.9% and 5.5%, respectively. However, the fine dining segment experienced a slight decline of 0.2%.
Strategic initiatives and shareholder returns. Moving on to strategic initiatives, Darden has been active in returning capital to shareholders. Can you elaborate on their recent actions?
Absolutely. Darden repurchased $183 million worth of its common stock during the quarter and declared a quarterly dividend of $1.50 per share. They also plan to open approximately 65 new restaurants this fiscal year, with capital spending projected between $700 and $750 million.
That's a significant investment. How does this align with their long-term strategy?
These actions reflect Darden's commitment to growth and shareholder value. By expanding their restaurant footprint and returning capital, they are positioning themselves for sustained success.
Operational efficiencies and future outlook. Let's discuss operational efficiencies and the future outlook. What are the key factors to watch?
Darden is managing inflation well, with expectations of 3.0% to 3.5%. They also anticipate a 2% sales growth from an additional 53rd week this fiscal year. The adjusted EPS outlook is set between $10.50 and $10.70, which includes a 20-cent contribution from the extra week.
How does the effective tax rate play into their financial planning?
The effective tax rate is projected at approximately 13%, which is relatively low and provides a favorable environment for profitability. This, combined with their strategic initiatives, supports a positive outlook for the fiscal year.
CEO insights and market position. Finally, let's hear from the leadership. What did CEO Rick Cardenas have to say about the company's performance and strategy?
Rick Cardenas emphasized the strength of their strategy, focusing on being brilliant with the basics. He highlighted their ability to grow sales and market share while leveraging their competitive advantages. This approach is key to their long-term success.
It sounds like Darden is well positioned in the market. Any final thoughts on their competitive stance?
Indeed, their focus on operational excellence and strategic growth initiatives places them in a strong competitive position, allowing them to navigate market challenges effectively.